Welcome to the Dealmaker Catalyst, and I'm your host, Jason Seward. And today's guest is someone who has spent decades helping professionals rethink how they build wealth and create financial freedom. Dr. David Phelps began his career as a dentist, building and operating a successful dental practice for more than 20 years. But while running that practice, he was also quietly building something else, a real estate investment portfolio that would eventually allow him to step away from clinical dentistry and focus on investing, teaching, and mentoring others. Over the years, David has become a well-known voice in the world of financial independence for high-income professionals. He's the founder of Freedom Founders, a community and mastermind built specifically for dentists and other professionals who want to transition from relying solely on earned income to building wealth through real estate and other investments. His work focuses on helping people move from high income to true financial freedom by creating cash flow, building assets, and designing a life that isn't completely tied to their profession. Today, we're going to talk about how David built that transition for himself, what he's learned from working with thousands of investors and professionals, and how someone can begin building real freedom outside of their primary career. David, welcome to the show.
Jason, it's great to be here.
Yep, I'm excited about this, and we were just talking offline, and I'll kind of preface this, and this is exciting as the host for me. A lot of times with this Dealmaker show, which is different than my other one, I'm just getting to know the people along with the audience, right? This is our first time connecting, and that's a good challenge for me and exciting because I'm really in talking to Jim Ingersoll, who is our common friend here. I'm really excited to hear your story and kind of what you've built there. So I'll start off. What is your connection to Jim and Dealmaker?
Jim and I met through some mutual real estate mentors. Some names that are probably familiar to some of the people listening today, but Jack Miller, Jimmy Napier, John Shaw, Pete Fortunato. Pete's still very active, in the world today, thankfully. But we're all aging out, and we lost some of the people. But that's where Jim and I first met back over 20 years ago. Yeah, definitely over 20 years ago. And when his girls were just girls,
Right.
now they're grown and he's got grandkids. But we travel a lot together. We did a lot of events together. Jim, Cheryl, and my wife Candace, we spend a lot of time together, and it's been a great ride because everybody that knows Jim knows where his heart is. He's a smart guy. He's an engineer, so he's got the analytical brain, but he's what I call a true go-giver and a servant. And I think the testimony is what he has created through the Dealmaker community over the last 10 some years.
Absolutely. And he's funny because we just launched a local Dealmaker in my market, and he came to the opening event. It was probably 60 or 70 people there, but he introduced himself as an introvert. And I kind of looked at it and I said, Jim, if you're an introvert, then I want to be an introvert, because he is a master connector, networker, and all those things. And his self-proclaimed, being an introvert is the reason I'm hosting this and not him. He says he's not very comfortable with this kind of stuff, but I'm excited to do it. And I love Jim. He's done a great job connecting me into his community, and I'm very appreciative. So, David, you, as I read in the intro, you started your career in the medical field and as a dentist. Let's go back. Let's back up the clock. Was real estate investing or any alternative investing even on your radar when you first got going in that field?
Well, it was actually, Jason, and I'm probably a little bit of an outlier, but I think most of the people, listening to this podcast are outliers. That we're kind of like renegades.
Yes, right.
And we're going to talk about that. But I think most of us we went to school and we got certain grades and licenses, certificates to get into a point where we can make a living. I mean, that's the whole goal when you're young and you want to be independent. So you strive to achieve a level where you're making money and can get above the scarcity point where it's. So I was always interested in in my mind, I'm thinking, how does this work? And I'm talking about being really in college. I was in college and I knew I was going to go to either medical school or dental. I wasn't sure early on, but that was the path that, I'd kind of been tapped, because I was pretty good at math and science. And so, you should go that direction. So, but I'm thinking all along, Jason, that even though the professions provide certainly a lot of respect, and certainly can provide a lot of financial security. That security comes with a trade-off, and it's a trade-off I call the golden handcuffs. And you and I talked about it a little bit before. It doesn't have to be a profession. It can be, you were in sales. Salespeople can make a lot of money if they're really good, and that's great, right? But you've got to be there doing the calls. And so when we talk about earning a living, that's where we all start in life. But I knew there was something more, and I didn't even know what the investing world looked like. So I started reading books when I was in college about the stock market, Wall Street, because that's where most people go to think about retirement investing and saving for the future. But I also found a few books on real estate. And when I compared and contrasted those two sets of books, real estate just made sense because, well, as we know, it's tangible. It's a hard asset. You can evaluate it. And when I read books about the stock market, mutual funds, back in the day, that was back in the 70s, it's like, well, they make it sound alluring, but I don't know how you understand how you have control over that. Because I wanted some sense of control. The whole idea for me was, if I'm going to build a future and have more freedom and options, then I've got to have control of that. I can't just put it out there to a world that I don't really understand how it works, right? And so as I read books about real estate, and when I was in my first year of dental school, so I wasn't even a dentist yet. I decided I needed to get going with this plan of building assets in real estate. So I convinced my dad, who believed in me enough to provide the financing for my first rental house, 1980. Gosh, is that 46 years ago? Hard to believe. 1980 seems like it was yesterday. It does. It seems like yesterday.
David, I was born in 1981, so I was being
fight on first house before you were born. See, I know. We're generationally apart here, but we're speaking the same language, which is fun, because that's what I love to see, the generations getting it, and that's what deal makers doing. It's part. So anyway, so it was like my first joint venture. And we talk about like people talk like, well, how do you get started in real estate when you don't have any money? Well, I certainly had no money. I'm a first-year student. I've got debt. I'm taking out student loan debt. I had no money. I was waiting tables in the evenings just to pay my rent and put gas in the car and pay for my insurance. So I had no money. So it's like, well, that's my first joint venture deal. Certainly it was a family member, but still I had to put together a deal that made sense. And the deal was, we would split any cash flow, which was minimal because we financed the property. And I'll tell you, back then, Jason, people are complaining about interest rates today. Our mortgage interest rate on that rental property, 30-year fixed, 13.5%. Okay, yeah, I know people go, no way, yeah, but we can talk about why that balanced out. Anyway, long story short, I managed the property. My father wasn't, he lived 2 states away, so I managed the property. It was in Dallas, Texas, and I learned a lot about management. Learned a whole lot. Made a few mistakes, but long story short, sold that property at the end of my 4 years in dental school because I was moving on, and we split about $50,000 in capital gain profit. And for me, the wake-up call for me was, okay, how much time did I have to put into, number one, finding, locating, and negotiating the purchase of this property? How much time did I spend over those 4 years in actually managing it? And what was my earn rate if I put dollar per hour versus what I did waiting tables nights and weekends? And I made pretty good money back then. Back then I was probably making about $20 an hour waiting tables. So that was good money, but it required me to be there on a schedule. And this asset, this property, produced way more if you put an hour, dollar per hour toward it. And I thought, okay, there's something here. And that's what got me started. So I started in real estate. I tell people I was actually a real estate entrepreneur before I became a dentist. So that's the real story.
Yeah, I love that. I I can relate in one way because I mentioned to you offline that I spent 17 years as an insurance sales professional and kind of moved up through that. But before I got that job, the first place I lived out of college, I was renting a single wide trailer. And my grandmother, who was a local real estate agent, she said, you need to go to the owner and see if you can buy it from him. Yeah, and it was my first, I'm 21 at the time. And I said, well, I don't have any money. How can I? And she educated me on how to finance. We ended up doing a seller finance deal. And so that kind of early on gave me a taste of how these things work. And I was the same from there. Alongside building my sales career, I was also buying property and building it on that. So I can definitely relate to kind of before I even started making any money. I had nothing at that time. I started kind of scratching that itch in real estate. Um, so you went on, obviously the story from there evolves. You went on to do big things, but you spent a lot of years as a dentist, and you call that, and some of the research I've done, you kind of refer to that as, well, you just said that the golden handcuffs or the high income trap. Kind of talk about that, you know, hindsight. Would you do it again? Would you stay in that profession to earn that income, to be more bankable, to be able to get into these other assets? Or would you have done it differently early on?
Well, yes, we can always look back in hindsight, and it's a fair question. Young people would ask me today, David, would you go back and go into dentistry again? First, I want to say I have no regrets. I don't look back at my life with any regrets at all because you do the best you can with what you have, and I've lived a very blessed life. But if I were to be true to what I know today, and going back when I was 18, 19, 20 years old and figure out my future, um, I would have done it differently. I would have I I probably would have gone back back then. I still, college was still kind of a big deal. Whether you went to a junior college, community college, 4-year school, that was still kind of a big deal to do that. Today, I don't personally think it's that big a deal. And now, if you want to be a rocket science engineer, a licensed professional, you have to. But I say today, why do that? Why do that? Go that route, unless that's really what you want to do. If you love that, then yeah, we need people that are in those fields. But if you're doing it just because you want the safety, the relative quote perceived safety of having, a professional job, a lot of those jobs, maybe not so much in to some degree in medicine and dentistry, it's coming, but AI, technology, robotics, but certainly taking away a lot of white collar jobs that, the attorneys. I mean, I'm not saying do your own legal work today, but I can do a lot of my own legal work and then maybe have a checkbox by an attorney. I don't have them doing all the stuff they used to do, right? So there's accounting. I mean, there's a lot of graduate degrees that are going to be put out to pasture. And so what I would say is really the best thing to do as a younger person is find good mentors that are in businesses, and it could be any kind of business. It doesn't have to be real estate, but if you want real estate, then I'd go say, well, what could I do to be kind of a gopher, an apprentice in a business where somebody really seems to have the chops and is on the forefront and adaptable, and learn from them and get that knowledge. Then if you still want to go back and get some specialized education somewhere or degrees or anything, you can always do that. But I think we get the cart before the horse today. I think there's got to be a lot more common sense to education and what young people are doing today. So I would do it differently. I didn't. Today I know I wouldn't need a profession to do what I did. But as I said, no regrets. It provided what I needed, and I made a pivot. About 20 years in. So it was all good. It was all good. I still look at my life today and say it's been amazing.
Yeah, I don't disagree at all. I sometimes, again, I try not to have hindsight in the sense of any regrets. I I knew that I was ready to make the pivot 5 years before I did, and so it was just that comfortable of, I was in a very easy career, and easy from, it was easy to make money. It was demanding on my time, but I can certainly understand, and I don't know that I'd change anything because for so many years it did. The biggest piece, and now knowing what I know now, I could have done it without this, but I didn't know that back then, so I needed that income. I needed, the bankability and all that. Um, Now, when you talked earlier about the need for control, right? And as you invest in things, you want to have, back then you wanted to have that sense of control. What was there, a trade-off or an evolution there where I believe it was, but with passive income, you have to give up some control at some point. So how did that look in your evolution in your story?
Well, yeah, for the first 20 years from that first rental house in 80, first 20 years, I was definitely, hands-on, doing what a lot of people in Dealmaker, I was dealing primarily with single family residential. I was also learning how to sell properties with wraps and financing and, use a lot of the arbitrage techniques that are used today. But I was hands-on. I was putting those deals together and no one, so it was not passive. It's definitely hands-on doing that. And that level of control, putting my time into that along with my profession in dentistry, which was a full time, two sides of the coin, working both together. But building up the equity, which turned into more passive income, is what provided me the way to step away from dentistry. I had enough in coming in from free and clear properties that produced enough for me to not have to go to work as a dentist, and that was the first really freeing moment in my life. And it wasn't because I'd set a goal to get out of dentistry at in my mid 40s. That was not a goal. My daughter was really sick. She had a lot of health issues, some medical crises, and that's what made me really center on how can I get more free, and do I have enough in that passive income coming from equity from real estate to do it? And when I scratched it out on the back of a napkin, I had enough for then, enough to buy back some time, which is what I wanted. Uh, Converting them over as we all get older, you'll find that time becomes the commodity that you want the most, because we eventually run out of time. Everyone else, and all the money in the world can't buy more time. If you have assets, if you have a lifestyle that doesn't require you to be earning, whether it's active or passive money, to the hilt, then you've got a lot of freedom. And so I don't want to control. I want control, but I don't want to be the one operationally dealing with the stuff I dealt with, 20 plus years ago. So now I have to put some level of trust, and I do a level of due diligence we talk a lot about when I'm putting my money through other people to still invest it in assets that I like, which a lot of it's still real estate. A lot of it, I put it into other commodities today that I believe in. So I'm diversified, but I don't have the same control. So you give up control, you're gonna likely give up a certain amount of the returns, because when you're hands on, you're gonna get a higher return. You have to count your time in that return. People say, oh well, in real estate, if I'm hands on, I mean, I can get double digits. I can, if I do wraps and arbitrage, I can get 50, 60, 70% on certain amounts of money, and that's wonderful. But that takes a lot of juggling balls, right? I mean, and so you get to a point where, like, I don't want to do all that. I'll take a lower return if I can do it through other people, but then again, you're separated from your money a little bit more, and now you've got to be careful. Like, well, how am I setting up those structures as a more of a passive investor?
Yeah. So I would imagine most of your students and your audience they're largely made up of high income earning professionals, right? Doctors, lawyers, things of that nature. They, I would say the huge majority of them did not start off like you. They did not, so they've probably reached a point where they're in their 40s, 50s, where they're making all this money, but they are tied to that, and they're looking for an early exit somehow through alternate investing. So your experience was you got a career alongside of your main career of education, just by trial and error and trying different investments. But for somebody that's sitting there, they're 40 years old, they're a doctor, they're a lawyer, they're earning $500,000 a year. What should be their? I think the obvious answer is connect with a mentor or a group like yours. But as far as action, tactical action steps beyond that, what should be their first thing they should focus on?
Well, the key is mindset shift, and the people, as you said, Jason, that we attract are those professionals who have made a fine living and have saved up some money, but typically they've put a lot of it, on the default mode of Wall Street. And I'm not saying Wall Street's bad. I'm not saying 401ks are bad. I'm not saying any of that. But they learn that they can actually do some self-directing, as we know. So they can take those accounts that they've saved money up and say, well, could I put it in other assets? Could I diversify more? And that's what most people want to do is they're saying, okay. They've seen the volatility, and every asset has some volatility, but some have less volatility than others. And so they say, well, they're thinking, well, how do I get involved in something, let's just say like real estate? And so I think the first thing, yes, as you said, you've got to get educated, and you have to find the right place for that education. I'm very biased, of course, but I think we do an exemplary job of that with what we do. But there are other places to go to get that. So number one is education first, before you get tactical. There's a fair amount to learn, and I always try to slow people down, because a lot of times it's like, well, I see now I've got a route to invest in real estate, and so it's like they want to go start putting their money really quickly. I say you need to slow down and understand some of the frameworks and understand market cycles a little bit before you just jump head over heels because we are going through a shift, as we all know today. And people are trying to figure out, well, where is this going, and how do I shift my model even as an active boots on the ground investor? There's shifting going on today. Well, if you're same thing, if you're a passive investor, you can't just go by what people said they were doing 3, 4, 5, 6, 10 years ago. It's like, well, where do I need to go today? And that takes a little time. So I tell the professionals, Jason, that it's really a reinvestment in themselves first. Like they invested first in themselves, going through school, education, getting license degrees. That was a big investment, right? And then they get out and they earn their living. I said, if you want to learn how to take care of your future, your financial future, and not abdicate it to third parties, then it's going to take another reinvestment. Either you decide to do it or not. And if you decide to do it, then go all in. But you can fold time. You can speed the process up by being around other people that are going the same direction, and find those groups where there's authenticity, transparency. That's where I think you really learn what you can do and kind of where the guardrails are, so that you don't make some big mistakes, as a lot of novices would do.
Yeah, and that, to your point, there's so much power in proximity, right? Just being around, now stuff doesn't happen through osmosis. You can't show up in these groups and expect to get results. You got to take action on what you're learning. But like you run a mastermind community, and over the last several years, masterminds have exploded in popularity. There's a lot of people making a lot of money running masterminds. I was with a 23-year-old a couple weeks ago on an investor cruise I was on, but he was 23. He's been flipping houses for 2 years successfully, but now he's running a mastermind. And like, that didn't resonate with me. You've been doing it 2 years. You haven't been through any down cycles or anything like that. But some people say the mastermind space, they're anti-mastermind because they think it's filled with expensive networking clubs that don't deliver results. What separates a legitimate mastermind from one that's just selling access?
Well, I think you start out by saying is, what is the experience in the room? Not only the founder or facilitator, how many years of experience, how many cycles have they gone through, kind of what's their resume, what's their story, but also who else is in the room. Look, like you said, I'm not going to put anybody down who is taking whatever level of experience and sharing it in a specific niche with other people. But that's where, again, I think, so young person who's learning to flip houses, okay, I mean, you got to start somewhere, right? And it's not easy, as we know, and it's tougher today. But if someone's teaching really good fundamentals and not just selling, hey, come on, you can make boatloads of money doing this. It's easy. Let's talk about really what's there. I think you've got to find groups, communities where there is a wide spectrum of experience, in the arena. And certainly, a deal maker, I've been going to Jim's deal maker since he started him back. Well, we kind of started together back in 2013, and he took what we started and did deal maker, and I did Freedom Founder. So it's kind of cool to watch. But you've got to have people, in the room, that have a wide spectrum of experience, because that's what you got to look for from a person's standpoint. I'd be really careful about a group that was too specialized in saying, this is the only way to do it. Like whether it's flipping houses or wholesaling or subject to, it's like it's too dialed in. You need to say, well, what's this whole lay of the land, and learn, where these different vehicles fit on the scoreboard, if you will, and say, well, this used to work back in the day. But it's not really a good place to be today because XYZ, we're shifting over here. You've got to see that big picture. And I think too many groups with people that have done well in the last few years, they're focused on one thing, and that one thing maybe worked during the time, but is it going to carry the ball down the road? Likely not.
Yeah. You mentioned earlier, folks, making that transition. They're self-directing their investments now, and I've seen this, and it's been in the news here recently. A lot of these investors um, really getting themselves in a bind because they're investing in things they're not, and you mentioned it earlier, not fully educated on, right? They don't understand all the nuance. And one in particular, and I see it a lot. My main business, we run a debt fund. We're a hard money lender, and but we're experts in lending. We know all the nuances of it. But I see a lot of investors take their self-directed money, so they're still working. They might be a doctor, lawyer. Lawyers tend to know the details a little bit more, but whatever the case may be. They might have a $500,000 they want to allocate to doing some short-term private lending, but they don't know all the nuances involved, and they can get themselves in trouble in doing that. And that, I'm saying that this is more of a statement to validate what you're saying about being in a group that can educate you. You've got whatever it is, whether it's investing in, you want to do private lending, or you want to be an LP in a syndication, a limited partner. You have to know what they're doing to underwrite it. You have to know the operator. You've got to know the jockey as well as the horse. So how do you educate people when it comes to that, how to vet out these different, I mean, there's a whole world of investment opportunities. How do you educate them on how to vet them out?
Yeah, well, we have a lot of frameworks that break that down, and in our group, we will take specific opportunities that anybody can curate from the space, and we'll bring them into our community, and we will together, break them down. Certainly, we have a lot of checklists for underwriting due diligence that would be prudent questions based on whatever the investment platform was, as you said, whether it's investing as an LP in equity syndications or as a private lender, as a first lien, second lien. I mean, all the things that you need to know, and what are the steps you need to take to really give you the best opportunity for number one, not to lose money, right? And secondly, how to break down and look at pro formas, and there's so much there, right? But for people that are involved in it, I think that's the fun part of a community, because if you're trying to do this by yourself, it's hard. It's hard. I mean, reading documents. Number one, it's hard. Well, if you have a template and you have other team members around you, a good attorney that could help with some of that, some of the documents if you're doing, like, say, private lending, or even acquiring a direct investment in equities. But again, same thing with funds and syndications. You've got to have people around you that can kind of look at it together, and then you can make decisions. I think trying to do it by yourself, or just going, or just being pinged, on Facebook threads, and everybody's got lists of accredited investors, and they're out there just going after people today, left and right, saying, hey, if you got money, boy, we can get you this, this kind of return. And it's like, today, you better look really hard before you jump into it. I just think shared experiences in communities with people that you can really meet and discern whether they're your kind of people, right? I mean, I look at values and character. Yep. Before anything, and then you start, going down and doing your checklists. Too many people, I think, are just want to jump out there and think they're going to make something happen, and it's kind of that greed factor I think it's innate in all of us, and you have to tamp that down and learn to exude some patience, particularly in times like we're in right now, where the markets are changing very, very rapidly, geopolitically, economically, inflation, interest rates. I mean, we've seen it all in the last 3 years, right? And we're not done with that.
Yeah.
So that changes everything. And I think, the discerning investor, whether you're boots on the ground or you're a passive LP type investor, you've got to be more heads up on what's happening and make decisions not based on momentum. What's everybody else doing? But like, what's coming around the corner? I mean, that's how I look at it. What's coming around the corner that I need to be more cautious about. And I think a lot of people are just not there. But around other people that are also looking that way, then you can gain some really insight. And I think that's a key today.
100% agree. I have invested in quite a few syndications as an LP over the years, apartments, storage facilities, you name it. And there's kind of one common denominator. The successful ones were the operators. They led with the risk. They led their presentation with, like, this is what can go wrong, and rather than me having to ask those risk questions and them dance around it and sell all the upside. And that's how I try to run all of my operations as well. Like, what lay out what the nightmare scenario is, and if I'm comfortable with that and it's valid and I agree with it, then now we can start. Now we can build upon that. And it's the ones that, to your point, if they're selling the rainbows and all the positive and they dance around the risk questions, those are the ones you got to be careful with. You mentioned all the political and the economic changes. Everything's changing so rapidly right now. It's a different environment than it was, when you were making your transition from the medical field to full-time real estate. would you advise, or do you advise your folks now that you're coaching to proceed with caution, or just proceed with, I mean, they should always proceed with caution, but hit the brakes a little bit before making any major career decisions?
Yeah, I think this is a time to be more cautious. I think liquidity. How fast can you get your hands on real cash? And I know people say, well, you don't want too much cash, David, because inflation's eating it up. Yeah, there's the other side of that coin for sure. But when we're going through a period of time like we are right now, I think exuding more patience and keeping a little bit more cash on the sidelines, whether that's in treasuries, which get almost 4% today. It's not going to beat inflation. Precious metals. We're going to get money pretty quickly to sometimes close the gap, but also for the opportunities are coming. I think there's in a lot of asset classes, there will be great opportunities coming. You don't have to be out there today. I know a lot of people are saying, well, hey, now's the time to buy, now's the time to buy. Well, it's always a time to buy if you know what to buy and where you are on the spectrum of what pricing is. It's always can be a time to buy, but unless you're really boots on the ground and really have your finger on the pulse of a certain market, a certain asset class, as an outsider, you don't really know. And I think you have to be more careful. So I think that's a big part of it. The other thing would say is that we have such a disparity and I'm going to use the term inequality because in terms of wealth today, people, particularly since COVID, we've seen what is termed the bifurcated or the K-shaped economy. People that held assets, businesses or other tangible assets, have made a lot of money coming out of particularly COVID because there's so much stimulation. People that are hardworking, live paycheck to paycheck, mainly W-2 earners, they are having a tough time today because they didn't get the big rise that we see in a lot of assets that we're privy to. And the problem I see is that this divide in wealth is not going to turn out well. And some people say, well, I care about people that don't have money, but I mean, they have to figure it out for themselves. And I'm thinking, that's not going to pan out. We're already seeing a lot of socialism move across the country. Well, I mean, I'm just going to say it. Virginia just elected a governor who is, to me, off the charts.
Yeah.
New York City, off the charts. All right, I'll just say that. And we're seeing this wave. What's that about? It's about young people saying, this isn't fair. You guys, kind of looking at people like me, my boomer generation, you guys took all the money. That's kind of this, and I don't have a chance. And that's not going to play out well because our leaders that create legislation, our representatives, they don't lead. I call them leaders, but they don't lead. Their entire job is to get reelected. And that means, where are the voters?
Yep.
Where's Cory Booker from? What state does he represent? Do you know offhand?
I don't.
It's somewhere on the East Coast.
Mm-hmm.
Well, he just came out this week and said he's gonna run on the Democratic platform in 2026, and his deal is, hey, if I'm elected, the first $75,000 in wages, no taxes.
Right.
I mean, that's his platform. I mean, see, this is who they're playing to. They're playing to the people that feel like they're down and out because they don't have a chance. And so what's that mean for people that are taking risk and capitalists and trying to do a good job? They're going to be extracting more from us. And not only extracting in terms of taxation, but also inflation and also legislation. And I think you've got to be careful about location. That is where you operate, because I would stay out of states that have turned and are turning blue. And we all know what states those are. And
yeah. I mean,
my buddies in Richmond are kind of like, oh my gosh, what happened here? So you have to look at that and say, where am I investing? If I'm investing on Main Street, do I want to be in a place where the regulation comes down and they have rent controls and it's so consumer and like tenant friendly that I can't even evict a tenant? That's California. I mean, go out to California and try to run a business out there. I don't know. People are leaving in droves, right?
mm-hmm.
So I know I went a little bit on a little rant there, but I think this is a thing that you've got to look at as you decide how you're going to go forward in the next, not just a few years, but the decades. It's going to change a lot.
And I hate to say this, but it's true in our business. We lend nationwide, primarily in Virginia and North Carolina, but nationwide. And when we one of the first underwriting metrics we look at when determining when to go into a new market is the politics of that market. At that, it has to be that way because as lenders, if we have to take a property back, how long is it going to take us to do that? If we own it and have to put a renter in there, what are the landlord laws? And typically, like to your point, the blue states are not favorable to folks that are doing our business. And I've got operators that I'm very close with in California. I trust them with everything. I can't lend to them in California because of these laws, and so it's unfortunate. I couldn't agree with you more, and we're seeing more. It We could do another hour on this topic. So,
Good.
but I think the main point, and kind of back to my question, is folks. I mean, there's going to be a lot of folks listening to this, or that they are your avatar. They are in kind of on that hamster wheel of earning a lot of money, feeling like there's no way out, or they're starting to see a little bit of light. And these are just things they also need to consider rather than, oh, I can right now make money this way and that can retire me. So I certainly
Yeah.
agree. Um, David, I want to give you kind of as we close out um, an opportunity to kind of promote your specific mastermind. Again, I know there's going to be a lot of listeners in the audience that can benefit from a group like yours. So talk about what it looks like, what the structure is, and kind of what folks can expect from a mastermind like yours.
Yeah, it's a really it's a tight knit community, and I say that for people that can go back to the '90s. There was a sitcom called Cheers. You familiar?
Yes, I am.
Well, okay, I thought you probably would be. And if you remember Cheers, the main theme song is "It's a place where everybody knows your name."
Hmm.
So that's really what I love, and I'm part of other communities that are they're the same. I mean, Dealmaker, like you go walk into Dealmaker, and if you've been going to events for the last even couple of years, like you're gonna see, oh my gosh, there's people that know me and I know them, and that's what I think you want to be around. So that's what I believe I've created as well. And so when you're in that kind of environment, we have live meetings. Because that's where you really get to know people. But certainly today with online and like we're doing today, the virtual aspect also allows for a lot of connections. And so we do a lot of training. We do a lot of frameworks in terms of, and a lot of business succession. People that are in a business, a profession, they're always looking to free up more time even before they exit or sell. And so we talk a lot about optimizing that pathway. And sometimes one of the best tangible assets you can have, as long as you enjoy it and it's not stealing your time, like that hamster wheel, is a business. But then also, where are you building up your assets to provide for a long-term, exit, so you can exit and not have to downsize your lifestyle? And talk a lot about, what are the dangers ahead that a lot of people I think are not aware of. And so just building a mindset, I think, is part of what a community does, and that's what I love to be a part of. Just like you all do in Dealmaker, the resources that we have available to us, not just resources in terms of education, but also people.
Yep.
When you're in a community and you ask for help, how quickly can you find it in a community of people that are connected? Well, somebody can get you connected to a person, a resource, you're just like within seconds, many times. Whether that, if you're trying to do it by yourself, you're going to be lost in the world and go, well, how do I figure this out? And so I think speed to getting clarity about goals and how to take action going forward. And then the last thing I'll say is we spend a lot of time with the next generation, our members, and their young adults or even their grandkids. If they're entering this world today in a time that I think, as I said, it's changing, it's different, it's not the same. And how do we help the young generation not feel like they have been displaced in an environment that is not favorable to them? There are definitely ways, and we talked about at the very beginning. Just going back to education. What's the right educational path? I think it's different for many cases, and we don't have to go do the same thing the same way we've done it many years ago, because I don't think it fits today. But you have to discuss it. You have to have a reason to enter these discussions. And if there are people that are on that hamster wheel, making a good living, and still trying to figure out, well, how do I exit and have some certainty about my future? You've got to be in a group. Ours is one of those, and I'll just leave it there.
No, I think it's great. Not, it's obviously you presented all that very humbly because I can only imagine what kind of value that you guys provide. And I am beneficiary of being in groups like this. So, and the ones that I get the most value from over the years have been these smaller, more intimate groups that we meet in person. And like, there's one group in particular, everything in my lending company, from my SEC attorney, my, our CPA now, our mentor that helped us, basically consulted us in building it, all came from this one group. But it didn't come from the group necessarily. It was being at the event and then going and having lunch or coffee with these people on the side. And that's where the magic is made. And I think a lot of people are, and people ask me all the time, I can't believe, how do you pay so much money to be and all? Well, think if I had to put a dollar amount to the value that I've extracted and the value that I've been able to provide to some of these groups, it's 10x what I've ever considered paying for these things. So don't let that be a barrier. And you're dealing with folks in your group, obviously there's going to be a cost to it, but man, they're looking for a way out. And if you're looking for a way out, that it comes with a price, and that price gets you access to people that are in the same shoes as you. And I think that's worth its weight in gold. So,
well, you're gonna pay a price either way.
yeah,
The
right.
price you pay is not a cost; it's an investment. If you use the investment the right way, the other price is a negative price. If you don't allay yourself with the opportunities in networking and communities, then the price you pay there is probably to stay on that hamster wheel and live a life of a lot of uncertainty.
Yeah, absolutely. And David, I want to be, respectful for your time. So we're gonna go ahead and wrap things up. There's a lot more we could talk about. I know you're an author of several books. How many books have you written?
Oh, 7 or 8, I believe.
Okay. Yep. So what I want to do is, in the show notes, I want to drop links to those books. I want to drop links to your mastermind and all of that, so folks can, read more up on you, research it, and if they're in that situation, a six-figure earner or a professional that, has the bandwidth to take on some, a mastermind or something like that to get out and take the next step, then you're a good place to start. And I appreciate your time today. That wraps up this episode of the Dealmaker Catalyst. If you want to keep learning from elite operators and plug into a national community that lives this stuff every day, check out Dealmaker Catalyst. Make sure you subscribe, leave a review, and share this episode with someone who's serious about leveling up.